Hello, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good evening, good afternoon, traders, wherever you are hearing, whatever you are watching this recording. I hope you are doing well, and I hope you are gonna stay healthy. So, today is the 11th of October 2024, which is Saturday afternoon, not just the morning. It is 12 p.m. Yeah, it is currently 12 p.m. here, Nigerian time, which is exactly the same as a UK time. So, uh, I'm sorry. Last week I didn't actually record a trade my trade breakdown on a uh, on a weekend in a weekend. So I have been busy the last week, so in uh, trying to get everything in just one place. So I'm just literally didn't record it. I don't know the reason why. Just to put, I did have the reason why I didn't record that video because of some reason. So it is why it's, at some point you have to accept the facts that you just missed your schedule. So you have to accept that, and you have to accept the facts that at some you are going to mess up some days, but you have to keep that in mind. If you keep repeating this excuses, you are not gonna get anywhere. You are not gonna achieve what you want. So I have it. I heard this quote from the author of Atomic Habit, which is James Clear. He said, "A habit missed once was a mistake, but if a habit missed twice is a preparation of starting a new habit." So you must not have to miss your schedules or task twice in a row. You have to accept that you don't have to. You should never ever miss the twice time in a row. A habit when a task or a schedule snacker for twice time in a row. So because if you do that, you started to prefer to change from the habit that you are currently in to another one. So I just missed 1 week, so it was a mistake. So I have to accept the mistake that I have. So I'm currently this week's. I'm just going to analyze the 2 weeks of price action. For now, I'm just going to focus on from 7th of October 2024 till 11 of October till 11 of October, 7, 8, 9, 10, 11, 5 days, and 5 days working trading days. So I'm going to focus on it. So here is a DBP or GBP USD, which is the DXY dollar index. I'm sorry, which is the before I started analyzing every single pair, which is GBP USD or Euro USD. I do have to analyze dollar index to see what I am actually currently looking at in order for me to have an idea where am I going to get involved. This is going to where do I going to get either in GBP or GBP USD or Euro USD. So this is what I've been doing for the past years back. So on GBP USD on dollar index, this is a daily time frame. So on a daily time frame, we might see the markets on a bigger picture. The current order flow of the market is literally, we might say it's a bearish. Oh my days, the network is bad. So I don't know what is happening. So the current order flow of the market is bearish, and the current structural market is still maintained bearish. So the reason why I say this, the current order flow of the market is being bearish. We have an uptrend for a while. I don't know what is happening. Okay. I'm sorry. So okay, the current order flow, as I'm saying, on a daily time frame, structural market is bearish. Oh my god. What is happening? Oh my god. Okay, the current order flow of the market is still maintaining bearish, and the structural market is still maintaining bearish because we've broken this. We just pull back here. We broken we didn't broke, we just retest again and we broke in this. So this move is just the gravitate the liquidity that was been resting above here, because we didn't mitigate from this legs to this legs. If we measured it, we didn't mitigate the 50% of that leg. So that means this is might act as an inducement, so that is why the price action induces this buyers, early sellers, okay? Induces this early sellers. So after we see in the market just gravitate toward this liquidity that was been resting above here, so we just started market, the order flow of the market started making series of bearishness and then turn a bit bullish for a while to gravitate all of the liquidity that was been resting above here. So that is how the market moved. The market moves in four ways. This is exactly what you are gonna see in the price action. Price will always do the following thing: run toward liquidity, or generating liquidity, or imbalance gap in price, or reprice the equilibrium of the range. That is exactly what price is going to do. So we are not gonna expect the market just to continue to move to the downside, like it's going to go forever. No, the price action literally seeks where the money is, and this is how the price action is doing. So if we look at the current order flow, the market is literally telling us the bearishness, and then we turn bullish like that here. We broken this high here. So where did we expect the market to reach in order for me to literally classify fullback after we seen the market broken this daily structure? Where did I expect the market to started to see in a fullback? This is supply zones here that was been resting above here. Supply that causes this BMS to the downside before in hand. So we see the pullback here on this structural market, then we see the market broken this, and then we see the market retest at least 50% of that range. This is the range. You see the market mitigated at least 50%. Yeah, the market mitigated at least 50%. So what do we see? We see the market continually move to the downside. So what do we expect if we see the market broken this structure? We do expect the market to literally retest this supply to continue move to the downside. But keep that in mind. The market is always need to seek some area of liquidity before the real move started to kick. So you see the market just broken this previous external daily structural high. So I do expect it to see the market reverses into this daily demand before we continue move to the upside. All the markets can do this to mitigate this, and just gives us some reaction at this here, not to continue on to the downside. So that means this is going to be maybe act as an inducement, or we say is liquidity fudge or liquidity sweep, whatever you want to call it, is all the same. So let's jump into the 4H time frame to see what I do expect in the following weeks of 4H time frame, yeah, on the following week that we were literally in. So in the 7th of October, which is Monday morning, I used to do my market preview, market analysis. So this is exactly what it is look like. So it's actually the daily time frame and the 4H time frame is literally looks the same. Yes, of course it looks the same, because we turns out from, we started to see the market structural market is turned bullish here, and then we mitigated the extreme demand here. We just traded, we didn't trade above the previous high here, and then the market decided to continue move to the downside. So that means this broken structure is literally gravitated toward the liquidity. So then we started to see the market making series of lower highs, lower lows. So this is the highest point that was being formed after we see in the BMS here. Yeah, no, this is the highest point that the market has just been introduced after we seen the market broken this 4 HPMS. So this is the highest point. I don't know why I put this on. The highest point is going to be here, right above here. And we see the market just broken this impulsively with a candle close above here. So that means the change instead of the market structure shift from that moment. The market structure shift from that moment. So we just the first week of October, we just seen one massive push to the upside on the markets. So I didn't actually I have a losing streak on that first week of October. So it is what it is. You have to accept the facts that at some point you are not gonna win every single trade. You are not gonna win uh, every single trade. You are gonna lose some and you are gonna win some. As long as your risk reward ratio is higher than your losses, it's going to be a goal. Even if you are risking 1 to 2, 1 to 2, 1 to 2, 1 to 1, 1 to 2, you are going to make it as long as you stay consistent. You are gonna maybe in a 10 trade you are gonna lose 6 or 7, but if your risk reward ratio were monsters, you're gonna kill in it. So you're gonna lose a lot of trade. I'm telling you this. You're not gonna win a lot of trade. So on a 4H time frame, I do write this. What the fuck is this? Okay, yeah. Oh my god. Oh no. This is last week of shows. Yeah. Yes, of course. Here it is. So on a daily time frame, as you guys can see, on a 7th of October, if you see the arrow of my cursor here, you see 7th of October 2024 at 7 a.m. in the morning UTC plus 1 time. I do analyze the chart here, this is a daily time frame. I do expect to see the market react at this daily supply. This is exactly what I do expect on a daily time frame. So let's have a look at a 4H time frame. What I said on a 4H time frame, we are currently in here, which is 7:15 UTC plus 1 time, which is 7th of October, 7 a.m. in the morning before the London sessions open. Yeah, I do have that in mind. So yes, of course, this is right here what I analyze the price action from here on the GBP, on the DXY. If you look at it clearly, you will see where I put this cursor. If you see the time axis here, you see the sub one on Monday, October 2024, which is 10 p.m. here. This is 6 p.m. 6 a.m. Okay, 6 a.m. I'm sorry. So this is the notes that I just put inside right here. For now, I am going to continue to go with the current order flow of the markets. This is what I write. The current order flow of the market is bullish. It's literally bullish. Because of why is it bullish? Because we've seen this massive push to the upside that broken this daily structure and this 4H structure. So I'm going to continually go with the current order flow, even the facts that we have this massive push, which is causes introduce us and you daily on 4H fair value gap inefficiency and price. But we do sometimes see in the market rebalance this price, but for now on I am just literally going to go with the current order flow of the market, which is exactly, it is bullish, is exactly bullish. So they do mitigate the 50% of that price of that imbalance. So we just started to move a little bit lower till we mitigated, but we didn't mitigate the 50% of that fair value gap. We just mitigated from here. We just mitigated here and we started to push higher. So this week we literally been bullish all the way. We've been bullish this week. So this is what I said to myself. From now on, I'm gonna continue to go with the current order flow of the market till I do started to see the structural market change from bull to bear, because we still have a lot of buy side liquidity that need to get forged on M15 time frame. Remember the current order flow. If you see capital or FN, I mean order flow in the DXY is bullish. The current order flow is bullish, so that means I'm going to continue with the market, what the market is literally telling me. So this is exactly what I expect to continue to go with the current order flow. Well, I might expected to see the market reach before I started to formulate the idea of short position. We do have a previous high here, which is 15th of October, 15th of August 2024. This is the highest point that the market's been introduced. We didn't see the market swept at this high at that specific time. So till here, this is exactly, I said that there is a lot of sellers that will be selling the market from here, because we do have the money transfer from here. We just have a swivel liquidity. We just have a broker market structure. We do have a mitigation of that last of close can loses order flow or supply demand, whatever you want to call it. We do have to see the market shift from that area. So what did we expected to see the market? The market just generating more liquidity right above here, and at some point we do see the market swept at this high, but we didn't till here. This is exactly what I said. We do have there we still have a lot of buy side liquidity that the market need to get forged inside of this daily supply. Yes, of course we have it, and we swept at this high instantly. Let me check the recording. It's still recording this all. Yeah, 16 minutes. Yeah, inside of this daily supply we do see the market mitigate, and we do have to see the market swept at some point. So let's look at the M15 time frame to see what I have been telling you. Oh my days. Let's yes, of course, the last week I've been catching a lot of what can I say? I have took a lot of L's. Yes, of course, here is this is the NFE news that drive the market push highs, which is almost 1,000 or almost 100 pips. Yes, yeah, of course we do have push. We do have a pullback. We do have a push. We broken this external BMS here, and then we started to formulate the idea that we are gonna continue to move to the other side. But what the price action do? We broken this, and then we mitigated, and then we broken again. We swept this high. We broken again. So at that point, at that time on, I just seen the current order flow of the market is maintaining bearishness on a Monday price action, and this is exactly what I do. This is a trade that I took on a Monday, on a Tuesday. Yeah, not on a Monday. On a Monday, I think, did I take it? Yeah, I take a trade. I take a buy position. I take a buy position on DXY and sell position on a dollar index. I take a trade from here. That trade from here. Yeah, I take it from here, which is 930. If we look at a GBP USD, yes, of course, at 930, let me show you the real chart. On a daily time frame, we expect to see the market mitigated this demand because we continue to move to the upside on a daily time frame. This is the GBP USD, not the DXY. Let's also look at the whatever I am looking at on a dollar index. I am going to flip the side of the thing on a GBP USD or Euro USD. If I'm looking to take a buy position on the dollar index, I am going to look for a short position on a GBP or Euro USD. That is, man. So I do take a buy position, set on a buy position on a Monday price action on GBP USD from here. Yes, of course, I take a buy position, which is exactly here you can see on a Monday 6th of October I take a buy position from here. Let's look at the M15 time frame. Some shows you whatever I expected on a GBP on a dollar index. I have to flip the side of the thing to look at the opposite on a GBP USD or Euro USD. I take a buy position from here. Do expected to see a higher price on a dollar index from here to target it at least 3R. Targeted at least 3R on a dollar index. The 3R is going to be 3R is going to be here, but the main target is going to be the external high, which is the market didn't actually reach that level. So I take a buy position from here and I take a sell position from here. At 9 yes, of course at 9 a.m. in the UK time I took this trade, because a bunch of confluences just was being made from here. I'm not holding. I literally didn't hold the trade till this low here. I just took out it at 3R even here, because we took out this at the BPR here, balance price range, whatever you wanna call it. So this is exactly what I take on a GBP USD on a Monday. So I secure 3RR on this stretch. We just have a bunch of confluences. That is the reason why I took this. I'm not gonna explain anything here, but you can see we have a SMT was Euro USD. We have a breakup market structure. We see the mitigation of the order flow, the last of close candles that took out the previous low, and we do started to see the market shifted from bullish to bearish, and this is exactly what is happening on dollar index. We started to formulate the idea we are going to go off, because we broken this, we mitigated this, we swept all of this those that was being generated, liquidity that was being generated on this, just push higher. So that is exactly what is happening. So on the next following day, I did not, at least I wakes up at that day. So I on this this week's for me, I didn't literally wake up to watch. I didn't literally show up like 5 times in 5 times on that week, because I won the first week. I won the first week of the day. The first day of the week, I won 3R. So there is no point for I didn't think I'm going to continually move, show. I don't think. What am I going to say? So the following day, which is Tuesday, 8th of October, we just took out the this is not this is a second strategy I've been using, which is time-based liquidity. As long as you see the two side of the liquidity of the market that was being swept, so we saw at some point we might see the massive push after we see so let's take a look at the example here. We do have London Asian session low here. We do have a Asian session low here. We do have NY sessions low here. We do have previous days low here. So we have 3 sides of liquidity of the market. So we swept this low and we swept the NY session low, which is a key level area, which is 1.3660 at key level area. So it makes sense for me to take a short long position from here. But the overall trend of the market is literally been bearish. But after we're seeing this side of the liquidity of the market being swept, we might take a counter trend position, but we have to keep that in mind. That counter trend that we take isn't going to long last. For like, it's going to give you like 1,000 pips or 100,000 pips. No, you just have to take it like a little and move on, because of the directional bias of the market is still maintaining bearish. So we didn't see the mitigation of that breakup block that we take. If I zoom out onto the lower time frame, you will see what I am telling you about them. Let me see if I no I did no I didn't have that image of this. So I missed this trade. So day two I missed this trade. Day three I didn't show up on Wednesday. To be fair with you, to be honest with you, I didn't show up on Wednesday. So if I do show up on Wednesday, I definitely going to look for a long position from here, because it is a counter trend. Yes, I know it is a counter trend, both on a higher time frame and a lower time frame. On the M15 time frame is a counter trend, but on a 4H time frame is a pro trend, because we are in a demand. But if I take this trade, it is not a confirmation entry, but it is a time-based liquidity, because we swept the London low and we swept the previous day's low of the market. So two previous days of the market, we swept this 7th of October and 8th of October. On the 9th of October, we swept two conservatives, two side of the liquidity of the market, which is previous 2 days lows. So we do see the market push higher from here. So I do expect it to see that, of course, but I didn't show up. So of course I didn't show up. And we see does the market mitigated this? So why here? So maybe I didn't show up actually at that day. So the following day, which is 10th of October, which is the day of news event, which is what can I say? The days of a news event that was gonna be released, which is CPI. So I do have sometimes I do stay away from. For me, I do stay away from trading a news days event, because we tend to see the market just been rangy before the actual move started to kick in on a specific that day. So that day is a CPI day. So because of the CPI day, I didn't show up on that day actually. So that is how it is, man. I didn't show up on that day on GBP/USD. So this is, you see the market just, after we mitigated this supply, the market just started generating more liquidity, and we swept the Asian high. Did we sweep this? This was NY sessions often on 9th of October. We didn't sweep this Asian high on NY sessions highs. We did not. We just swept this. We just swept this Asian session high. We just blast through it. So I don't think I'm going to perform at that day, even if I did show up. So because of that news event, you see how the market just push higher, we just push low, and we just meet. Oh my days, this is crazy move. How many pips the market just to move on that day? Let me count. The market moved like almost 80 pips, 75 pips already. So on that day, so this week is going to be winning back to back for me. It's literally a winning. So I just took two trade on the Friday. So like I'm told you, this was on a 4H time frame. Like I told you, on a 4H time frame. Oh God, what the fuck is going on with that? Oh my God. Oh my God. I'm sorry. So, like I told you, there is a lot of sell side liquidity that need to get forged before we continue with the trend. But the current order flow of the market is still maintained bearish of GU. So where did I say on a? Oh my days! Why my device has been slow this week? Yes. What the fuck is going on with my computer? Fuck. I don't know. My system need to literally been refreshed. I just have to restart it. Isn't responding. Oh my god. Did you guys see that?